Kiplinger actually suggested 9, but we decided to pick out 3. So there's Target, P&G, and also AbbVie. So for Target Corporation, it's an American big box department store chain where they are having these main 5 segments in their shop houses, which is involved in beauty and household essentials, food and beverage, home furnishings and decor, hard lines, apparel and accessories. So it is actually the 7th largest retailer in the US. And currently they have about 1,926 stores in US. Previously they have operation in Canada, but then since 2015 they actually discontinued the operation, which will be shown in their financial. So we see that the revenue is also in a positive and consistent uptrend. However, for their EPS in 2015, it was in negative. It's because that year they discontinued their operations in Canada, which resulted in a loss. But if we see that the overall trend of the EPS is actually on a gentle positive uptrend. And for the operating cash flow, we can see that even though it's a bit zigzag, but the overall trend that we see is still a positive uptrend. However, their debt to equity ratio is a bit high for here, which we can see that is slowly increasing. So this is something that investors should take note if they are interested to invest in Target Corporation. Next, we will look at P&G. So P&G is actually an American multinational consumer goods corporation. So they actually offer 65 brands of consumer care products, such as in healthcare and oral care, fabric and home care, beauty in skin and personal care and also hair care, grooming such as shaving blades, and also baby, feminine and also family care. You can see that these are some of the things that we actually use daily. And this company is actually founded in 1837. Then we will be looking into the financials. We see that the revenue, since the company is long-lasting, why is the revenue looks like a V shape, where the earlier years of the decade is like sloping downwards before it goes back upwards. So we decided to expand further and see actually that is just a short downtrend. It's because during those early years, the company is actually restructuring and they sell off some of the departments such as food. Because last time Pringles was actually within P&G, but then they decided to streamline and restructure and they sold off their food departments. So we can see that the overall trend of this company is actually a positive and consistent uptrend. And for the EPS, we noticed that even though it's a positive in 2019, but it was a sharp drop compared to 2018. So in their annual report, they actually mentioned that they actually stopped the partnership with PGT Healthcare, which is a partnership with Teva Pharmaceutical. So this one is involved in over-the-counter medicine. So because they are restructuring and streamlining the products, they decided to dissolve the partnership, which caused a sharp loss in it. But then the subsequent years, they managed to recover. So if we observe the overall trend, we see that it's a slowly gentle uptrend. So we will also look at their cash flow situation, and we just look quick glance at the overall trend, we see that it's actually a slowly increasing uptrend. However, even though their revenue, EPS, and operating cash flow is in an uptrend manner, the debt to equity ratio in an uptrend manner is something that we do not want to see. But then for the past 3 years, even though it's more than 0.5, we can see that the management has been trying to lower down their debt situation. So this is something that investors should also take note of. For the last company in AbbVie Incorporation, it's an American biopharmaceutical and research-based pharmaceutical manufacturer, and they actually produce drugs in 5 main areas, which is in immunology, drugs for immune system, hematology oncology, which is the drugs for blood cancer such as leukemia, aesthetics like skincare, contouring, plastics or regenerative medicines, neuroscience, especially drugs for migraine, psychiatry, neurodegeneration, and also eye care such as glaucoma. So AbbVie is actually a part of Abbott Laboratories before it was being spun off in 2013. And Abbott Laboratories has been founded since 1888, which is quite a long time ago. So right now, Abbott Laboratories is mainly involved in medical devices, diagnostic equipments, and also nutrition products. So in order to streamline further, that's the reason why AbbVie was being spun off from Abbott Laboratories. For the revenue of the company, is actually in a positive increasing uptrend. And when we look at the EPS in general, you can see that it's an increasing uptrend as well. And the cash flow situation is also an uptrend. However, the debt to equity ratio for AbbVie is much higher compared to the other companies that we have looked at. So with that, Even though the 3 out of 4 of the financial metrics looks good, but because the debt is quite high, investors are strongly advised to further look into the annual reports or their financials to determine the reason why the debt to equity ratio is quite high for the company.